Good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for about 7:15 p.m. Central Time on this Tuesday, October 25th. I'm already in November. October 25th, 2022. First piece of good or bad news, depends how you view it. I will not be putting out these updates tomorrow. Some of you get a rest. I'll be traveling. I intend on doing them again on Thursday, and then you'll get your weekend edition on Friday. So let's talk about what we've got and where these markets are. All day long, strength, strength, strength. Again, the market believes the Fed is going to cut interest rates much sooner than many of the others of us do. There's two schools of thought on it. Some of the schools of thought is the Fed's always going to be late. They'll realize it. They're going to have to stop earlier rather than later. I'm of the school of thought that even though the data is old, I'd like to see the data, the CPI, the jobs data, the PCE, everything that the Fed looks at, so I have an idea of what they think. They're going to look at that and they're going to make a decision, all right? When I look at these markets, any way I look at it, you may not agree. I'm still $92 Brent, $85 crude. Gee, that's got inflation in it. When I look at the stock market, it's still pretty high up here. The dollar, not at 114 anymore, but you know, it is under 111. Metal markets not doing an awful lot one way or the other, but food prices are hanging in there. We did see Case-Shiller drop and drop hard. They're back to what was it, 2020 levels. That's good. So they've taken the air out of that bubble, and they've taken the air out of some rents. I see that. What about the rest? That is where the problem lies. Where is the sticky CPI? That's what we all want to see. I can join the camp that thinks it's going to be earlier after I see this upcoming jobs CPI. I'm looking for the first crack, because once we get the first crack, I think you'll get the other cracks behind it. But what if it's stronger? You're way too soon, and that could be very expensive. All right. When I look at the S&P, could you rally on a weekly chart to the 39.12 area? I've been saying it. Today is, we're already in Wednesday trade, and I've been saying this. Yes, you could. Is it a problem doing it? No. Should it go much beyond it? No. When we get to the daily charts, there's a number in front of that makes me think you're not going to get there on this particular run. I'll show it to you now. When you look, this is the current move that we're having. And if you take a look at it, some people will call this a saucer. What does that mean? Coming into a pattern, and then when the market swings back, you come back under that. Just something to think about, okay? Could be that pattern. You're not there. You're in the pattern right now of higher lows, higher highs. That's bullish. Market's over the 18-day average, as I said before. That is bullish. This is not bullish. This is where you went to the upper band. What do I teach you when you hit the upper band and you're not with an embedded reading? Bye, bye, Miss American, bye. Right? Bye-bye. Say goodbye. That's what you do. You don't have to believe me. I'm not trying to guide you, but this is what I teach in my course. And if you take it, you learn the reasons why. And this whole thing is not about my course. This thing's about talking the market generally. But how could I tell you what to do if you don't learn what I'm doing, all right? And when you got down here, I was saying the same thing. Don't believe me. You're looking at this free, which means every one of these videos are there on YouTube. Go back. What was I saying? Do it yourself, okay? It's not a track record. I know what I say. I'm talking general in what I'd say. If you were sitting next to me, you get what I call the elbow boom in the ribs. Why are you hanging on? You'll say, because it's going higher. I say the easy money's out of the market. You're not embedded. You hit the band. You could go higher, but the odds don't favor it because you got the 100-day average even above you right there. What else? Well, what about the NASDAQ, Ira? Oh! Well, you missed that one. Yes, you did. So we'll come back here, and you had to have the number hit 11,779. It didn't hit it. It hit 11,772. You don't always hit the band. You're in a zone. That doesn't mean I tell you to come out of that. You are overbought. Be careful. Lots of careful right now, because when you look at tonight, you're already down like that, all right? So now you're chasing yourself, hoping to get back up there, trying to come out. That's basically what's on. You went through it in the Dow. That's okay. If it embeds, what is embedding? Let's learn. Embedding occurs when you get 3 days in a row minimum where the slow stochastic, the way that I apply slow stochastics, not your numbers, my numbers. My slow stochastic is slightly different than yours. Every one of my subscribers in my morning research, I will give you the modification you make to make them identical to mine, and then away we go. But you can still use the old one. It's just not going to be as fast. Mine's even faster than yours is what I like. In any case, as I look at the market here, and it stays embedded, stronger, better. As I look at it, both numbers were over 90. Okay, let's go back a day here. Both numbers were over 80. 80 is the number I care about. That's 2 days in a row. 3 days in a row. Can you believe it? Wait a minute here. Friday, the market didn't have that. Monday, I got. Tuesday I got, but I'm in Wednesday trade. How do I know where the market's going to finish up? Plain English, you're not embedded. In order to embed, both these numbers have to finish the market out. It's right now 7, so it's going to be from here, roughly 20 hours from now, where the market's going to finish. That's a long day's time, okay? Don't know. It's an area where the pros are coming out until they know it embeds, then they'll start applying it. Right here, what do you think they did in the Russell? You're not embedded. Only the one that has a chance of embedding, if I come back to it, is the Dow. None of the others are there. The next part that we get in the VIX. If the market gets down to the lower Bollinger Band, I think the professional is going to write a put. He's going to look for support between this and the combination of the 100 to 200-day average for the market to get back to wherever the 18-day average is. In the 30-year bonds, you lost the embedded reading. You're losing the embedded reading. Did you lose it? Let's take a look. Where did the market finish today? I got to go to Tuesday. Nope. You're flashing and flirting with losing it tonight. Hasn't lost it. Is it a market that you'd want to sell when it's doing that? No. You walk away from it because you lost it earlier here, and you lost it earlier in the 5-year. I don't have the 5 here, but believe me, they did. And I was telling my subscribers, no, you don't want to play that game. It gets too expensive. I told traders that by Tuesday, in fact, today is Tuesday, you don't want to be in that interest rate game because you're probably going to get a correction. I said that last week. I said, if there's a shot to sell, it's got to be between the end of the week last week and maybe Monday, and after that you got to be careful. The timing was there and you're getting what it should be. In the dollar index, it's a nice pullback. Is it a top? Don't know. This is pretty important. You got up there and you came up, you haven't challenged that number. Is there enough left in the market if you're talking pivoting rather than the Fed's going to say super strong with interest rates to get back to that level? That's a big question. We'll have to go to the weekly charts for that, and we'll discuss it over the weekend. When we look at the eurocurrency, you're up to the upper band. Bye, bye, Miss American Pie. You don't want to hang in that. Now it's time to be walking away from the trade. You didn't hit the band. You're getting up right into that zone. Don't be bashful. If you're on my Spider ETF and you were in FXE, you know what we said this morning. In the British pound. So you got up to the Bollinger Band. Bye, bye. I'm a bad singer, but that's it. Not much that you can do with that. Sideways action. Now I'm looking at November Bitcoin. It's time to get out of the ox. It's now your move time. The chart is identical for all purposes. You got your wine bottle on the stove. Here's your neck of wine. It's boiling away. It's going to explode one way or the other. Then we get to the differential between Brent and WTI. Interesting. It has given up from being around the 860s, about 60 cents in the spread. And notice when I said to you on this, you got a lot of resistance. You have the 200-day average, the 100, and the Bollinger Band. That market doesn't look favorable. Right now, the control at this minute that I'm talking to you is with the bear because you've got lower highs. Okay, but do you have lower lows in the market? So the low today was 91.63. Let's go back to the prior low and see. This low was 91.02. Where I went to school, I have lower highs but higher lows until that's taken out. I want no part of this market until you get under that 91.63. But all I'm looking for then is wherever that Bollinger Band comes in and for support to come in there. It's a hard market right here. Well, if that's got some problems, so will WTI, and it does. Look at all the resistance up here. You think that's going to be easy to just get up and go through? You need a world event of some type to do it. Whatever that event is, I don't know. It's easier to slip down a little bit here, and that's what the market's playing with. When you look at heating oil from Ira Epstein's point of view, we're just going to get to the point where colder weather is going to become the norm. So the market is at that funny time. You don't need a lot of heat and you don't need air conditioning in many parts of the United States. So our energy bills for the moment are going to be very tepid. And that's what I'm expecting, and the market is waiting and coiling for whatever the next move is. But this is the one that I think got overdone. You lost your embedded reading. The odds are very strong that the market, before it gets back under that low, is going to hit wherever the 18-day average is before that is done. This game ran its course on this big breakdown there. And what do we talk about? What's generally, and the word is generally, do not tell me, Ira said it's every time. The lion's share, with make no bones about it, I'm talking 90 percentile. 1, 2, 3, 4, 5. You don't go beyond in futures 5 days in a row down before you get a spin back into the Bollinger Band. 5 days under it. Can you? Absolutely. Can you go 8, 9? Of course you can. Go find them. That's my challenge. Go find them on a lead month. I'm not interested in far back months where there's no trading volume and anybody can do anything that puts together 2 contracts without reality to it. I need these to be in the futures markets, the lead months. Do your homework. You got an assignment. Tell me what you find at that point. I'll tell you something I want you to find. I want you to consider what I teach. Number 1, the Enhanced Bollinger Band course on our website. Number 2, obviously, I'd like you to take a look each morning and join me in my morning subscriber video. Now, I've been waiting to do some extra reports and I didn't do them. I didn't know what to do. The markets have been so tipsy-turvy. I don't want to do a report just for the sake of doing a report. I liked the last stock report I did, and I think that if you looked at it, I hope you liked it. I worked hard on it, and it worked out pretty nicely. Now, I got to go away. I'll get my mind fresh. I'll come back, and I'll be doing more of these reports where they're going to be included. When I put these free reports on my website out, you have only a few times that you can see them free. After that, you pay for them. And I just raised the price. I want you to be a subscriber, not paying me for looking at a special report. So that's what I do. But this is what keeps this show going, everything we go. If you like me, why not do that? Are we talking big bucks? I promise you, you are not. If you're a Starbucks drinker and you have a Starbucks a couple of times a week, you're spending triple what we're talking here, okay? I have people in my office that they can go and get a Starbucks, I swear to you, twice a day. I go, you're spending 10 to 15 bucks a day with tips and everything. Yeah, but it's my coffee. Okay, and 5 days a week, 4 times, that's a lot of coffee. Well, cigarettes were the same way. In Chicago, cigarettes, I don't even know what they are, but I assume they're 12 bucks a pack. It's nuts. This is not like that. It's very inexpensive. And that gets you rolling for the evening when I do these wrap-ups. So go to our website under the word research, education. Take a look at what I've got. I think you'll like it. I'm Ira Epstein. You have a good day.